Hello and welcome. This is Roy. This time I'm sharing with you a clip taken from 70 minutes video that I just finished to record for my subscribers. The video is comprehensive as usual, and the clip is a very important clip that focuses on the bonds market in the US. If you are involved in any way in the bonds market or even indirectly following the markets, you must have heard about the recent upsurge in rates. And although the news seems to be focused on the US, the trend is widespread and it is reaching many countries as the T-note and the 30-year rate in the US are actually benchmarks to many other related markets across the world. If you like to see the full video or to have access to other videos that I'll be recording in the coming days and coming weeks, give a try to my service. My service is modestly priced. You can pay with PayPal or Payza or Skrill. If you have any question, any doubt, get in touch with me, and I'm sure you will not be disappointed. I can also answer specific questions if you have concerning positions that you have or markets of interest to you once you become a subscriber, even if you are on a trial subscriber. Other than that, I wish you have pleasant viewing and good trading. Bye now. List of the charts that I'll be covering in this video. I've got the dollar index, the euro US dollar, the US dollar Danish krona, Australian dollar US dollar, New Zealand dollar US dollar, British pound US dollar, British pound Singapore dollar, British pound Japanese yen, the euro Japanese yen, US dollar Japanese yen, US dollar Canadian dollar, the euro British pound, and then gold, silver, TYX, TNX, UST bond, continuous chart, UST bond September contract, the TLT, the Dow, the S&P 500, the Nasdaq, the DAX, the FTSE of the UK, the SX of Australia, the Chinese Securities Index, the Hang Seng, and I'll terminate the video with a look at Singapore's STI index. Now this is a very important chart. This is a very important chart. It's very long term, and I'll spend a minute on it. That's the US Treasury bond. That's the continuous contract, and it's taking us way back to 1970. Oof, that could be, let's see, 1977. Okay, I think it's when they actually started trading the futures. 1977. Don't remember the exact date, but 1977. Look what we've got here. That's the height. That's when the rates reached the moon. Yes, 1980s, and then the rates began to fall. And what you see here is a generational, more than a generation swing in rates falling. So rates falling, bonds rising. Okay, and now the pendulum looks to me like that it has swung to the other side, and we're getting into a precipitous fall in bonds for the next 20-30 years, maybe more, that will present really fantastic opportunity, absolutely fantastic. So we have an ABC X, and there are many ways that you can subdivide this. You can spend more than just a day discussing that, But this is in my opinion, sensible subdivision. It works. So far, it works. So I keep using it. That's an ABCX, ABCX, ABC, and we have another X. So you can have 3 X's, not more. Okay. So you have an X. Don't forget this is the monthly scale. We come up here. We have an ABC that I take as an A. B might have ended here, in which case it opens the gate for this being 1, 2, 3, 4, 5, reach the top here. Or the B might have ended here. Either way, I think that the top was scored here. The market now is definitely collapsing. Look at that. The market is collapsing, and to me that appears like the end of the road for the rates. The end of the road for low rates, and rates are on the rise. Now there are several channels here also that encapsulate the price action. You can see there is the orange channel, and then there is the blue channel that somewhere down up the road here The blue channel is beginning to reassert itself, and there is yet another channel over the last since 2007. Do you see that? That's the black channel, and all these converged clearly around here, and they stopped the rise. Stopped the rise, and the market is beginning to break. It's beginning to break. This is an historic event, and it appears to me that this time this is a genuine break. That's the weekly now. So the top took place here. Yes, we had about 6 months or more of attempted scaling to high highs, but didn't work here. It broke down. That's 1, 2. I take it that this is a third wave. I take it that this is a third wave that will have long lease of life on the downside, and this is the daily clear breakdown. No question.